Good afternoon, everyone. My name is Gyan Pampani, and I am the host of the Entrepreneurship Insights Podcast. This afternoon, we are here with serial entrepreneur Rajeev Talreja. After receiving a bachelor's degree in computer science at Queen's College, he went on to work a corporate job at prestigious banks for over 2 decades. The desire for freedom and a change from corporate America led Rajiv to open his own real retail business, as well as to invest in real estate. We would like to welcome Rajiv for the show. Thank you for joining us here today. We really appreciate you taking the time off to share your insights with us.
Thank you so much, Gyan. It's a pleasure being here.
So, considering your real estate business, one of the main reasons why people shy away from real estate is that they don't have the necessary capital to invest. So how did you what's your personal experience in generating capital?
That's a great question. Before we start into the injection of capital, which is always the fundamentals of challenges, or one of the challenges going into real estate, just give you a little bit of background and elaborate on how I got into real estate. If you kind of rewind the clock back to my college days, right after coming to US, I had a colleague who definitely invited me to the land of the opportunities. The land of opportunities that I'm referring to is real estate. And the way I got into real estate was trying to get into my real estate license, which seems like a great postal exam to be part of, but it's a couple of weeks of quick crash course. I joined All Star Realty and I met one of my mentors there, Mr. Heyman Shah, who got me under his wing and helped me guide through how the opportunities around real estate works. They're basically the crux and foundation of real estate. I was able to then do my first very successful transaction, which happens to be my family member, and probably on this live meeting, Sunita and Sham Shah. Makijani, where they were very patient with me. And when I say patient, it's putting it very mildly, because that took several reiterations of showing multiple properties before we could land on a deal, which they're actually very happily situated right now in their current home, which was actually one of the first closings that I was part of. Being part of that process helped me learn the basic foundation and the building blocks of what does it take to actually close a deal from starting to finish. Start being understanding what the client requirements were, which was a residential single family home, SFR for short, as a lot of people call it in real estate lingo. Moving on away from their apartment, which is where they were residing earlier. Being able to find a actual home that they can call home and live in turned into be a very satisfying experience. When I started seeing that angle of real estate, where I was able to generate happiness for a family who happens to be my family, but it's nonetheless a client, it not only brought great joy, but it kind of got me more interested and piqued my curiosity as to what all this real estate buzz is all about. Fast forward the clock 2 years into it, this was around the circa 2003 timeframe, I got into a colleague who was actually an employee of All Stars Realty, and she also was an investor. So the reason I'm kind of bringing this up is because she initially started off as a mentor, but became a partner. And the partnership led to not only me purchasing my current home where I reside in right now, but actually closing on 2 deals in the same time. So if you really think about purchasing 3 properties on the same day, I can tell you your hands really hurt. There's a lot of signing up. Paperwork is daunting, but the experience was priceless, because that experience kind of paved the way into the world of real estate. That, along with my couple of other jobs, and the corporate job that you're referring to was at Morgan Stanley, where I worked a 20-year career. 2 years of that really got me as a consulting gig that helped me understand the fundamentals of finance. And the reason I'm highlighting that is because the fundamentals of finance kind of gets you into capital and how do you raise capital, right? And that's really the founding blocks of those steps that one needs to necessitate into getting a real estate deal going. Now, there are some unconventional ways that we can raise capital. Obviously, I can't talk about it, but robbing a bank is one of them. Unethical, but people have done it. Now, there are certain people that are born with the golden spoon, where they can have a rich family member fund the deal, right? Not everybody has that rich uncle, rich aunt, but I happened to leverage some of that and I borrowed some money, right? So that was my first starting point. The reason why the job came in handy was being able to actually save a little bit of money because I wanted to be able to not only buy a home for my family, but being able to live that long term and generate future growth from it, right? When I say future growth, is basically trying to leverage my injected capital and let it grow beyond what I initially put in. It's the ROI, as some people call it, the return of your investment. So each month I started saving a little bit towards my dream home, right? It may not be a dream home for a lot of people, but it was for me when I first got excited into purchasing my very first home. Turned out that we purchased 3 homes together, but that was a different scenario. There are other ways to generate capital. You can sell items to generate some capital. There are lots of opportunities on eBay, Amazon. You have little intrinsic value items that you may not need that people need. People don't think of that as capital, but every penny sold is a penny earned, right? So that was one of the starting points. The other options that people consider is getting a second or third job. Well, that is a conventional method of raising capital, but that only goes so far because now you're constrained with time and capacity. How much physical capacity do you have, and how much time you really can put into generating 2 or 3 incomes? One of the best things that I had an opportunity personally was potentially tapping into my 401k, right? So as you build a banking career or any career that your employer participates into IRAs or Roth IRAs or 401ks, there are possibilities that a lot of people don't investigate into, but you can technically borrow against your 401k. Now, there's some gotchas that people need to be cautious about, and I highly suggest reading the fine print because there's interest that you have to pay back, not to mention there could be some tax implications around it. So it's always good to consult an accountant. Now, one of the other ways of generating capital is wholesaling. So you can technically purchase a property that you want, and people don't know this enough, but it's not as widely advertised, but it's becoming very popular in the last, I would say, 5 years. Is you can take the property instead of really building it up, renting it, or building it up and selling it, you can pretty much wholesale it, or some people call it quick flips. You can pretty much assign the property under another potential investor who would then invest their capital instead of you doing it, and you can pretty much take the marginal difference between what you purchased it for and what you would assign it for. The other ways of raising capital, and which is one of the things that I did, as I mentioned earlier, was partnership. Right? You may not have the entire amount to put in. Most banks or traditional lenders do require 20% capital towards purchasing a property. You can get around that by some other loans for, potentially an FHA loan, or Federal Housing Association Administration can give you a loan. But it all comes down to, do you really have the funds? And if you don't, partnership would be another way to divide up your capital injection. The couple of other ways that one I want to look at, and this is the most widely method, is going to a third-party lender. Now that's including traditional banks, credit unions. You have private money lenders. You have hard money lenders. You have peer-to-peer lending, right? You have lending from SBA, which is a Small Business Administration. So being in U.S. gives you all these opportunities, many of which are actually available globally. So if there's a global presence to this podcast, you can potentially leverage any or all these mediums. And I have done a combination of many of these. Peer-to-peer lending is quite fun, where you just request capital and you fill a promissory note where you would be able to pay that money back. And at some point, you're obligated to it on a finite term. So it'll be a year, 2 year, 3 year, 5 year term. The other way, and one of my favorites, is gap financing. That is either done through a line of credit that you have from your existing business, if you're not an existing business owner, and if you have an existing home, you can potentially do it from a HELOC. The way that works is basically the line of credit against your appreciation value on your property. That's just like a standard checking account or a savings account, and you can withdraw funds as quickly as 1 to 3. You're just moving money from account A to account B. I love this because it has given me a lot of flexibility and fungibility. The challenge around that is you have to have an appreciated asset in real estate. So for a first-time home buyer, you may not have that as a luxury, but as you build the wealth and as you start accumulating the finances, you can definitely leverage HELOC to your advantage. A similarly cash out refi will be another option. Credit cards. Recommended? Not a financial advisor, but there are ways to get money from credit cards. Believe it or not, you can do balance transfers on them, and this is something one of my other mentors and a good friend, Bob Mobbier, explained to me. I was apprehensive at first, which I usually am, but when I learned the process and experienced it, I was kind of amazed that you can potentially get a 0% interest loan against your own credit card by balancing transferring over to another credit card and then requesting a check payment from your bank. That holds a second credit card. Interesting concept, definitely look into it. But all this around this is just avenues. What it comes down to really is, do you foresee yourself growing in the real estate career, and where do you see your opportunities on raising capital? There are venture capitalists out there that are willing to fund your deal. Of course, they will want something in return, and usually it's a part of equity or stake in your percentage of your home ownership, and they can hold a lien against your property. So that's another angle of purchasing capital. I know that was a mouthful, but hopefully that gives you different sets of varietals of how you can raise capital.
Yeah, definitely. Like raising capital is a blocker, and that's why people shy away from doing it. But my takeaway was that there are so many ways, like wholesale partnerships, third-party lenders, credit cards, loans, everything. So it may not seem as hard as people may tell, right? And thank you for that.
And no problem. But the key word I should reiterate on all of those opportunities, discipline, right? In the end, you are borrowing money from someone or somewhere. And if you don't have the discipline of paying it back in due time, you can potentially be in a financial constraint. So it's important to have that financial literacy to be able to build your expertise around it and gain experience from injecting capital, because in the end, it may not be your money. Of course, your hard-earned money loss hurts right to the heart, but other people's money hurts you in different ways. So just be mindful.
Yeah, definitely. And this all stresses the need for a real estate license. Like Rajeev, you said you got it when you got it in your early college years, and it helped you buy your own dream home, right? And that's really important in accomplishing your goals. So you also have a retail franchise. And how did you raise funding and prepare for marketing? And how did you also stand out in that sort of market?
Excellent question. So in case people are wondering what that retail business is, it's a liquor store. Why liquor store? Great question. It just so happens I had the opportunity when I was working for JPMC back in 2018. My friends and I always look for opportunities. We started looking at, different ways of diversification. Real estate is really great, but I didn't want to put all my eggs in that same basket or single basket, as traditionally one would call it. So my good college friend, AJ Wadwa, and I, one day we're just shooting stars and say, okay, corporate career is great, but does he foresee himself working for corporate? It just turns out my epiphany moment was my aha moment of moving out of corporate in 2018 was the fact of the matter is, as I moved up the corporate ladder and the teams got bigger, responsibilities grew, the expectations grew, and so did the time constraints. Got shorter and shorter. I came to a point where I was just commuting 3 hours a day, each way back and forth, getting to the office at 7, getting home at 9, eating dinner, logging back on the computer, and it just got worse and worse to the point where it was basically an overhead on weekends and weeknights. The reason I'm kind of alluding to that point was because it was the ticking point that kind of sparked what can we do differently. It kind of hurt me when and this is probably a fact that not many people know, when my 5-year-old son almost couldn't recognize me because by the time he woke up, I was not home. By the time he slept, I was not home. Having a thought process like that really shook me. It as if somebody just took the floor beneath your legs and you just fall spiraling downwards. So my friend H and I were brainstorming, saying, "Look, we known each other for such a long time. Would you consider going in something together?" And the astounding answer was a resounding yes. Next steps were, what do you want to invest in? And yes, real estate is going well, but it wasn't enough to supplement the income to raise a family. So we actually started looking at laundromats. Quite funny story around that, but we'll leave that for some other time. We turned out that he already had an offer on a liquor store out in Long Island, which wasn't too far from home. So the convenience of being able to go there and operate a retail store was quite quite interesting, to be say the least. It gave me time back, which is what I was looking for. The financial aspect of it is where it became the tricky part. So to answer your question in a short answer way, partnership really got me there. And because I had owned a personal home under my umbrella for almost 11 years by then, it had appreciated in value over time, despite the 2008 crisis, the 2004, and other financial crises that we have faced. The appreciation helped me refinance my home into something called a HELOC, which is the home equity line of credit I referred to earlier. That gave me the capital injection that I needed to fund the liquor store. Interesting enough, the financing aspect of it was great, but we decided saying, hey, do we really want to inject 100% of your capital, or can we ask the seller to do seller financing? What that really means is the seller can potentially finance the deal to a certain portion of the deal, as opposed to you putting, or your business partner putting in 100% of the funding. Turned out it was as simple as asking the question, and the answer turned out to be a yes. Now the terms were agreed upon and leases were drawn up, and when we started looking at the lease, one of the other questions came up is like, is it really worth the monthly lease, or can we negotiate those terms? Again, it came down to a very simple back and forth with the landlord, and any save there turned out to be additional capital that can help feed the business. And for those who know how liquor business works, unfortunately it requires not just capital injection on owning the business, but the inventory, where you need the seed money for the business, you need the actual bottles of liquor, whether it be wine, whether it be spirits. Sure, you can borrow them from your home, but your home's not going to have that much amount of inventory, because your store needs to be filled by shelves, and you definitely don't want to have a liquor store where things are just empty. The shelves looking empty is a bad sign. How do we differentiate ourselves? Another great question. Marketing is definitely one of them. Having the niche products that we carry, it's a fine wine store, so it only is appropriate to carry fine wines, which obviously requires some higher end injection of capital. We do pride ourselves in carrying some of the very eclectic stuff that many of the stores, probably globally, don't carry it. And then with COVID, it kind of raised a sense of awareness that there are needs beyond a brick and mortar walk-in traffic clientele. So what we ended up looking at is using our technology backgrounds. Both he and I work for technology for almost 20 years, right? So what do we do to leverage our growth and education there? And we started looking at leveraging marketing tools. There's Facebook, there's Instagram, there's MailChimp, there's Google Ads, there's our own website. We have signed up with our delivery partners, which was Uber Eats, Grubhub, Grizzly, Instacart, Vivino's. These are all avenues of how we can get our product base exposed to just other clients that are not physically residing in that area. And then the last piece is automation, where we leverage automated feeds from our database, being a DBA and having access to doing some technology fun stuff around it. We were able to create reports. We were able to create feeds to our third-party vendors that gave them the ability to see what we carried in the store. So now, pretty much across US and many cases globally, we have a footprint that we wouldn't have normally. So that was a long-winded answer into how do we sound ourselves out.
Yeah, definitely. And it's intriguing and fascinating to know that the uh, that story, or the common story is, oh, from corporate America I became a free person by becoming an entrepreneur, right? But there's so much. There's every story is unique, right? For you, the tipping point was family, right? When your own son couldn't recognize you, and uh, and that gives an insight into, hey, whether should I even be doing this or not, right? Uh, is is whatever I'm doing, is it worth, is it worth that, is it worth that family loss, right? And that
Absolutely.
diversification, right? Not, and it not only applies to real estate or franchise or even stock market, right? Not putting all your eggs in one basket, right? Otherwise, once that basket drops, all your eggs are cracked, right? So split them up. I that 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 answer gave us a big insight into, hey, how should we plan our lives, and how should we plan, what do we want to do with our lives?
Mhm.
So
Well said.
knowing what you do now, would you do anything differently, start earlier, or change anything that you were doing when you were starting out?
Interesting you asked that question, John, because 2 weeks ago, I'm actually part of an alumni group from Queens College, and there was a nice little post where people were asking if you had to say a few words to your younger self, which is no different than knowing what I do now and what would I do differently. There are lots of things that I can definitely highlight, and I'm happy to share that with you from that post, which you can put it as part of the podcast. But the very first thing I would say is the word fear stands out to me. And a lot of people have that fear because you're trying something new. It's human instinct, human nature to be afraid. But if you were able to learn and grow under someone's wing, like I did with Mr. Shah, I did with my colleague AJ for the liquor store, I did with Rob from the real estate side, um, you know, it helps you kind of get a comfort factor as opposed to you doing this by yourself. That's definitely one. Now, the acronym for fear, as a lot of people may know, is false evidence appearing real. And it's absolutely true. Because in your first deal, your first transaction, your first business, your first startup, you will have that factor that will grow into you. But as you start becoming a seasoned person doing this a repeat and becoming like a wash rinse repeat cycle, it will start making you a little more comfortable into how these things work. It's common sense, but it's not really that common, ironically. The other thing I would definitely advise my younger self and others is don't be afraid, because that 9 out of 10 businesses may statistically fail. But more importantly than starting a business or thinking about doing something on your own, ask yourself the why. The why is really important. A lot of people say the what is important, the when is important, the where is important, the how is important. All that is great. But deep down inside, whatever you do or whatever you decide to do, why are you doing it? Until you have a clear why, all the other factors can be played around with, but the why is an equally important, if not the most important factor. My why was very clear, as I mentioned earlier. Once you know the why, the what's, the with, that where's, and the when's will follow. Of course, Mr. and Mrs. Google will show you the hows, but that's just a starting point, and the education will definitely help you there. Does it really give you the experience? Not until you do it yourself. As any swimmer would know, if you are learning how to swim, or any baby would learn how to walk, they will have to first learn how to crawl. Yes, you can watch a lot of YouTube videos around it, which is great, but until you are inside the pool or the ocean or on the deep end, you won't know what you're really made out of. And so you have to get yourself the feet wet, as they call it. The other aspect that I would kind of plagiarize from you, if you don't mind, is as Elon Musk often says and quoted, when something is important enough, you do it even if the odds are not in your favor. And that is what will differentiate you, or anybody for that matter, from the normal crowd. Because if you do not have that backbone to stand up and believe in yourself and believe in the why, everything else can be pretty much melting down and you will not be able to stand back up. Couple of more things I would definitely point out is you lead by example. It's okay to create your own pathway and leave a trail behind. You don't necessarily have to follow an existing pathway. Though that may seem easier, it may not necessarily be the right thing to do. It's circumstantial. It may not vary, but it's important to create that distinction. No risk, no reward. You have to be willing to take the risk. Not everything is forecasted in life. We do not know what tomorrow brings. A lot of people sometimes ask me, when do I start? Right? The when part is always important. For real estate, the time is yesterday. There is no real right time or wrong time. It's just a matter of, can you get yourself ready? And if you prepare yourself with the financial literacy, the education aspect of it, the tax-team partnership, the knowledge, and most importantly, or some part of capital, it kind of plays along in nice unified unison role. So that would be something I would advise me in myself. Of course, start earlier, but it not happen for everybody. There's no right age, there's no wrong age. You can be 90-year-old and still be doing real estate or owning a business, or you can be, as young as yourself. And there are many, many opportunities you've seen on Shark Tank, you've seen on any online platforms where people as young as yourself or as old as me could be potentially doing various businesses. You can make a business out of anything, as someone just told me, right, literally 5 minutes ago, which is great because it turns out that you are absolutely right. You can turn any task into a opportunity or a offering. If you have a value add service and you can build a client base around that service, you can charge potentially a premium for that service and make a differential into what you pay for versus what you sell it for. That's financial 101.
Yeah, like fear is fear is fear is, how do I say this? It's the only thing that will be with us. So we cannot get rid of fear, and having a sort of comfort, having a cushion or a pillow, like learning to grow under someone's wing, that is also really important. And I like the fact how you stress that once you have a passion, you can do anything to make that passion become into a reality. Same thing with your dreams. But if as long like you quoted Elon Musk and my WhatsApp status, as doesn't matter. It doesn't matter what the odds are, as long as you have the passion to drive forward and make yourself live a more fulfilled life. That's all that matters. And so you made the big shift in when you were older, or when you were younger. When you were younger, you made that big shift from corporate America to this life of entrepreneurship. So do you miss anything about corporate America, and how have your priorities changed as you become your own boss?
Another interesting question. It hit a soft part of my heart because I definitely miss the people. The team that we had built over the 20 years, the people that you meet. There are many that I still keep in touch with, but you miss going to work and meeting them on a face-to-face basis, building that relationship, building that friendship. Few of them have turned out to be long-term friends. Like Rob worked with me in corporate. Naresh, who's a great entrepreneur and owns a hotel chain, actually one of the early successors in Louisville, Kentucky area. Fantastic person and showed me how to get into that mindset. AJ, same thing. These are all coworkers, right? We were working together, but when you see, butterflies forming from coming out of their cocoons, right? It makes you realize that you could do it too. So that gives you that fortitude, as they call it, the backbone, the strength to fly. You can fly. It's just a matter of how deep can you look down inside. Do I miss corporate? I don't necessarily miss corporate. I definitely don't miss the work hours. Work-life balance was horrendous. As I mentioned, working on weekends. In fact, there was a funny story where being in a support role, when things go wrong, think of support role as pretty much being a doctor of technology. When things go wrong, you're the first person on call. Unfortunately, we used to manage systems where things constantly broke. And timing is of the essence because you're working for pretty much a bank, could be whether it be investment bank or it could be a prime brokerage bank. My role kind of shifted over the years, but the priorities never changed. It was all about I need this fixed, I need this now. Actually, I needed it yesterday, right? So when you have to drop everything, unfortunately, I was in a barbecue party hosting 30, 40 people. I had to drop the party. I had to pick my laptop up with my colleague and prioritize fixing the problem. Now, how bad is that? Do I miss that? No way. How did it change my lifestyle? Being an entrepreneur or being into diversified businesses, work-life balance was obviously number one. I'm free to do what I want, when I want, where I want, how I want. But wife is still always right. Still the boss. So you better know that I know who's the right person to talk to. I definitely miss the technology aspect of it, but not as much because I try to utilize the technology skill set that I learned and gained into various aspects of the businesses. As I started doing the liquor business, I was able to utilize definitely a lot of the technology there. When it comes to flipping, I actually utilize tools like Sesa to build my portfolio into a single portal. You can use Mint to also look at your entire network from different portfolios that you have and bring it under one roof. So there are a lot of technology tools out there, many free, that you can leverage without having to pay for a subscription. There are certain things that you have to pay for a subscription, which is fine because it's part of the business expense. But that's the beautiful part of being independent. Meetings, hey, I can have meetings anytime I want. I'm not at someone's mercy. Income, ceiling, sky's the limit. Of course, there's floors because things kind of cyclically go up and down in businesses, but it's not a matter of how much you make or how you succeed in businesses. You can pretty much fail in the business, which is possible. In fact, statistically speaking, as I mentioned, it's quite possible. 9 out of 10 businesses do fail. It's a matter of how quickly do you recover from that, and can you get back up and running is the important part. Sure, you can try different things and it may not work for you, but once you find your passion, it will turn into reality because you will love doing what you're doing day in, day out. Perks and benefits, I can call and sick anytime I want. Hey, I even go out of my bed and in my PJs and still do my business. In fact, my wife and I were with the family in Puerto Rico not too long ago, and we were working from there. She has a business, I have a business. It was very versatile. So being on the beach sounds fancy, but I don't need to be on the beach every single day. But it gives us the liberty of doing that. And it's an opportunity that I call a blessing in disguise. So I definitely don't miss corporate, but I definitely miss the people.
Yeah, it's amazing how, like you said, hey, I can roll out of my bed, I can hop on a call, like the COVID times, right? Like the office is just 2 minutes or 2 seconds away, right? That's living the entrepreneur life, but also the life acronym, as someone I respect says, life stands for learning infinitely forever, right? And despite or even though you have a college degree, you're using that, you're applying that in your job. Now you're using your experience in your job in your entrepreneurship life, right? And so that constantly learning and that growing, and you said sky is the limit for income, for freedom, anything, right? So that's my takeaway, right? That through entrepreneurship you can learn infinitely forever. So my last question is, what is your advice for teens thinking about starting startups and businesses or opening a franchise? And how are these methods the same and how are they different? So how do you get started on the entrepreneurship journey as early as possible?
Interesting question. I'll sum it up in 2 words, but I'll elaborate a little bit more. I call it the alphabet soup. The reason I call it the alphabet soup is because I learned the ABCs of it. And the A is affiliation. Affiliation with like-minded people. Being able to leverage technology, being part of technology groups, being able to affiliate myself with mentors gives me that opportunity to really help see a different visionary life. It may not be my opinion, but when you see other opinions collaborate with you, kind of help grow naturally. B, which I would say for a younger generation, is be cool, stay in school. Technically, it's more for the backbone. The reason why I say backbone is you have to have a strong will. It's okay to take after risks. Like I said, the baby needs to learn to crawl before they fall, but they will fall, and there's no doubt about it. The question really comes down to is, can you fall and get back up? The key of that is controlling your emotions. In the end, it's a business and a financial decision. You have to learn to separate the personal aspects of it from a business and financial decision aspect of it. For example, when you're renting homes or flipping homes, you're not there to stay. This is something you own, but you're not living there. It doesn't have to be the fanciest kitchen and the pool and a boat slip on the backyard, but someone else will be there. As long as it's able to generate revenue for you, it's a matter of being able to detach your personal emotions and control them and treat your business and your entity as a separate entity. The D, and I think it's very important, is delegation. You may know it all, but you cannot be everywhere. You have to learn to kind of let go of certain things. But what I will preface that with is trust and verify, right? You can trust people. You will need contractors in your business. You will need a team of lawyers. It's important to build that network and trust them, but you'll have to also do your due diligence around it. The E is for education. I think I alluded to that earlier. My way of learning was a realtor license. Does that have to be the only way? Absolutely not. But my learnings from showing multiple houses to Sunita Sham, to partnering up with my mentor, both Mr. Shah and Rob, was a education on its own, and it continues. In fact, I'm meeting up Rob tomorrow just to kind of learn where his thoughts are and talk about existing businesses, because I also lend money, and there are certain pitfalls around lending money which we have to talk about. So it's a matter of making sure we can get around that. My team of lawyers, in fact, happens to be an ex-coworker today, is one of my lawyers and a friend. Turns out that he wanted to help, me in many ways, and it's a matter of a give and take. The education also comes around YouTube videos and watching and reading. A book I highly recommend, which I love, is Robert Kiyosaki's Rich Dad Poor Dad. A lot of people have read it, heard about it. Think and Grow Rich is another great one. But it's important that you don't stop learning. It's a learning for life, because, like you said, the acronym itself is infinite, right? You don't ever think you know it all, because just when you think you know it all, curveball comes in your way, and voila, what happened? The F of the alphabet soup is the flexibility aspect of it. Things don't go always as planned, my friend. That I can tell you. In fact, I'm working on a flip with my nephew, Drew, amazing young lad, got his head in the right shoulders, and he reminds me of me just 25 years younger. And we were working on a flip that we thought everything was ready to go and put on the market. Lo and behold, we ran into a bit of a snag. Not a big deal, but if you understand the acronym of the BRRRR, as they call it, however you like to pronounce it, you can buy a real estate, you can rent and rehab a real estate, you can refinance a real estate, you can repeat that whole process all over again. But knowing that I was going to flip the property, we were potentially looking at, maybe with COVID, maybe renting might be the right opportunity. So it's important to be nimble and flexible, because your plans and goals and targets may not be met. You have to be able to swing around different solutions. You have to be a solution provider, as they call it. The other aspect of F, which I covered earlier, was fear, and equally important because when you're doing businesses or really anything for that matter, whether you're a startup or whether you're actually being an entrepreneur, that is the fundamentals where you have to literally grow upon. And the G aspect of it, without going into all the alphabets, is get started. Just do it, right? Because the more you wait, the more you're going to be pondering. You don't want to be the person sitting in a room just thinking about it for life. You have to be able to get out there and try it because you do not know how it's going to go until you try it out. Of course, take out the risks around it. Don't just be jumping in the pool knowing you do not know how to swim. But go on the shallow end, get yourself a coach, get yourself someone who knows how to swim, and then you go along with that. You tag along, which kind of gives you that benefit. So hopefully that kind of covers that aspect of the question.
Yeah, definitely. That was some thought-provoking insight. You just compiled everything that you said. Learning infinitely forever, being able to say, "Hey, I'm able to make this risk." You also stress the importance of a good network, being able to trust the people so you can move forward. You can build a codependent relationship where you are both growing, right? And you stress that nothing is permanent, right? And that's true. Like with real estate flipping, with stocks, one day it's up, one day it's like crashed on the ground, and just being able to say, just looking out for opportunities, right? Diversification. Those are my biggest takeaways from this conversation. And uh, the ABC, the letters of the alphabet, that's original, and that's unique and can be applied to everything. I'll also try incorporating that in my life. So
Make me
again,
hungry again.
yeah, again, I would like to thank you deeply. It was an honor to have you on my podcast, on my third episode, and uh, you being able to share your experience with us, your insights with us about entrepreneurship was really life changing. Thank you.
Thank you, Gyan. I really appreciate the time and opportunity.